Bitcoin and really the entire cryptocurrency market has had a very, very turbulent day. But is the crash over? Did we find our bottom point? Are we getting ready for a bit of recovery? Well, in today's video, I'll be discussing that topic with you, taking a look at the technicals, also some good news coming out of El Salvador. It's not all bad news. Some latest updates from the SEC and Coinbase, and also, of course, an update on what is happening with the Evergrande story out of China. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic you would like to learn some more about, make sure you subscribe to the Lark Davis channel. Tap on that thumbs up button for the YouTube algorithm, and of course, click on the notification bell so that you know when I put out a new video. By the way, every single week my team and I produce Wealth Mastery. This is a cryptocurrency investor report designed to help give you an edge on the markets. Every single issue you're going to get a deep dive altcoin report, top tier technical analysis, a step-by-step DeFi tutorial, trending coin analysis, my portfolio updates, airdrops, token sales, and much, much more. All of that for less than $10 a week. Click on the link down below where you can learn more about becoming a member today. Now, let's look at the charts. I got my bid filled. That's exciting news. I had a bid in at $42,500 in the morning. I woke up to see that it had exactly hit on Binance, and then the market dipped some more. Can't win them all. Can't win them all. I did have another order that I put in at $40,000, which just missed. Just missed. Got a little bit too overexcited on that bid. Should have put it in for like $40,200, would have got filled. Anyway, such are things. Now, what's interesting is that the candle wick that we saw today, daily candle's not closed. A lot could still happen in the next 20 hours, mind you. But the wick that we've seen so far brought us all the way down to $40,000, which is a pretty important area of price resistance, flipping now into support potentially. We can see that all the way back here, and again here, and again here, that price area acted as a zone of resistance. We're now seeing that potentially acting as a zone of support. Also interesting, remember we were talking about this last week, just after we had that big flash crash back on September 7th. I guess it was 2 weeks ago now. Remember how I was talking about how often what we see with these flash crashes is that the first sell-off is not the final sell-off of that particular market correction. We usually have one big dramatic sell-off at the start followed by another sell-off later. Well, that is exactly what we have had happen here in this situation. Now, right now, Bitcoin is down 24% from the recent peak price. Obviously, that's not the all-time high, but when we got to $53,000 here recently, down 24% from that. Now, how does that stack up with historical price corrections in the market? Well, let's have a little look here. We can see this price correction here, 27%, of course, before the market completely rolled over, but 27% from the peak all the way down to the bottom here. Here we had 18% peak to bottom, 26% peak to bottom, 31% peak to bottom. So a 24% correction, that kind of fits within the general frame of how much Bitcoin will correct during one of these big corrective cycles that it so frequently goes through in the market. Now, what's very interesting to see as well is that candle wick. I mean, just look at that. Once Bitcoin got down to almost $40,000, we had a massive amount of buyer pressure stepping up here, gobbling up Bitcoin in the low $40,000 range. It went real high, real fast, pushing the market back up from that sell-off point. Now, does that mean that was definitely the bottom of the sell-off? Well, it did come into our support zone. So that's an interesting point to bring up here. We did see buyers stepping up in a pretty serious way here. And the total amount of correction so far generally matches up with the kind of peak to bottom corrections that we do see for Bitcoin during a market cycle. So all of that kind of lines up, but I think really, let's keep it real. the market short-term bottom being in or not, the crash being over, strongly depends on the news out of China in particular, I think, for the rest of the week, what develops with that Evergrande story. We also, of course, need to keep an eye on what's happening with the Fed this week, the infrastructure bill. It's more of a nebulous kind of thing, but definitely the Fed news, I think, could shake up markets a little bit in the week as well. But definitely that Evergrande news has the potential to cause some more scares in the market. That is, of course, basically what these red candles right here represent. 1, 2, 3. Those 3 red candles, that's Evergrande. That's Evergrande. That's the Evergrande story. If you've survived this far and you look back in a few years and you look at this dip and go, oh yeah, that's right, the September China FUD of 2021. I mean, come on. Can we seriously get some new FUD, by the way? Why is it always China, man? Can't we get some new FUD? Can we at least get some India FUD again? It's been a while since we've had some good old-fashioned India FUD. Maybe we can get some Russia FUD or some Europe FUD. China FUD all the time. Always with the China FUD in the market, man. Now, I personally, as I mentioned, I did get my bid filled at $42,500. I have bids in right now to buy Bitcoin at $40,000. I also have a bid in at $38,000. Ethereum, $2,500, Luna at $20, and Polkadot at $25 and $22. So if we do get more downside, I'm ready for it. If we don't, well, c'est la vie, man. C'est la vie. My bags are already well packed on all 4 of these cryptocurrencies. If we get farther dips, I will happily add in to those positions. If we don't, well, that's okay. Now, these particular bids, just to let you know, they represent about 20% of my cash position sitting on Binance, but actually only represent about 5 or 6% of my total stablecoin position. I tend to never go all in or all out on any positions. I'll ladder out of altcoins. I'll ladder into altcoins. I stack Bitcoin for the long term. I stack Ethereum for the long term. That's how winning is done. Get the dips, guys. Buy low, sell high, not the opposite. Just a meme to share with you as well. I went kind of meme crazy today over on Twitter, but it really feels like this sometimes with Bitcoin. We were kind of just chilling a lot for a while after we saw that big flash crash. It wasn't doing a whole lot, and everybody's like, come on, Bitcoin, do something. Well, Bitcoin did something. Doesn't always do what you want it to do, though, does it? Bitcoin Fear and Greed Index also dropped down to 27. Times of great fear tend to be times to accumulate positions. Now, I would like to point out here, just so you understand, fear, a decent reading, but you really want to buy in extreme fear. You can add to positions. I'm adding to positions. I bought a little more Bitcoin. I've got bids in for Bitcoin and Ethereum and a couple altcoins. But the extreme fear times, those are really the good buying opportunities in the market. But the 27 reading on the Fear and Greed Index, that's the lowest reading since July. By the way, another fun meme for you, speaking of fear in the markets. It's so funny when you look at the psychology of investing and of investors, right? People are going to tell you, if you're here when Bitcoin gets to $100,000, Bitcoin gets to $500,000, people are going to tell you, oh, you're so lucky you bought it under $50,000. Or if you've been here since last year, I know a lot of you guys have been, if you've been here since last year, oh, you're so lucky you bought it under 20 or under 10. This market will test you like no other market. It's crazy. This is a super, super volatile, super fast moving 24-hour a day market, which is like drinking from a fire hose. There's hacks, there's crashes, there's macro news, there's the SEC, there's the Fed, there's DeFi, there's NFTs, there's 20 different blockchains you can be using. It's nuts. And you're going to be tested all the time with all kinds of drama. And this meme really sums it up well. If you went through these horrific crashes, these incredible market events, well, you probably have the diamond hands already. And if you're newer around here, understand that anybody who's been in crypto for more than a year, more than 2 years, they've seen some stuff, man. They've seen some stuff. And if they're still here, it's because they realize the potential of the market, because they're looking at the damn big picture. Now let's move on to talking about some El Salvador news. 1.6 million people in El Salvador are now using the Bitcoin Chivo wallet. This is 25% approximately of the population of El Salvador right now using Bitcoin. That's crazy, man. If you had told me last year, hey, look, next year there's going to be a small Central American country that launches Bitcoin as legal tender, and within a couple weeks of them doing that, 25% of the population will be using Bitcoin, I'd say, well, that's probably something that I could see happening, but that would be crazy. Well, here it is. It's happening, and it's crazy. It's crazy. Incredible adoption. Adoption rates absolutely soaring. They've gone from 0 to 1.6 million people using Bitcoin in El Salvador in the matter of just a couple of weeks. That's incredible. That is incredible. Wow. Wow. I absolutely love it. This is literally Bitcoin banking the unbanked. Remember, this is a country where 70% of people have no access to traditional banking infrastructure. It is a country ripe for the disruption of cryptocurrency technology. Bitcoin is the tip of the spear going into El Salvador and allowing people to have that economic freedom, freeing themselves from the US dollar, or at the very least, giving themselves another option, which is very, very important. Awesome. Love to see that. Next up, some quick SEC news for you. The SEC, of course, one of the 3-letter members of the international global banking mafia. So we talked about the Coinbase story. Coinbase was going to launch a lending product. SEC came out and said, how dare you try to do that? And then they subpoenaed a bunch of information from Coinbase. They subpoenaed a bunch of staff from Coinbase. They threatened to sue Coinbase if they dared to launch such a product. Coinbase, of course, asked, well, how can we do this? Can you give us regulatory clarity? What is the rules for this? They said, nope, we can't tell you what the rules are, but we can tell you this. If you do it, we're going to attack you. You will be threatened. You will be attacked. Well, Coinbase decided it didn't need to go have a giant legal dispute with the SEC. They have canceled their lending product. In case you have any sort of illusions about the role of the SEC, if you're a regular person in the USA, they hate you. They hate you. They're not here to protect you. They're here to stop you from getting wealthy. You're not allowed to earn 4% interest on your dollars. You have to go over to JP Morgan Chase Bank and earn 0.01% interest. You're not allowed to invest in pre-IPO stocks. You're not allowed to invest in token sales. You're not allowed to trade on leverage. You're not allowed. That's what the SEC tells to regular investors. Meanwhile, what do the elites get to do? They get to do insider trading. The politicians, man, they all do insider trading all the time. Federal Reserve, there was just a big scandal about them doing a bunch of insider trading. No one's going to go to jail for that. No one's going to get fired for that. No one's going to get in trouble for that. The banks commit fraud on a massive scale on a near daily basis. Nobody gets in trouble for that. The SEC's not looking at that stuff. What's the SEC spending all their time and energy doing? Trying to crush regular people. Not your friend. Not your friend. Bad SEC. Bad SEC. These freaking guys, man. Final story for today. Let's do a quick roundup on Evergrande. So Evergrande's potential debt blow-up is not a contagion event for the market. This, according to the man who called it 10 years ago, saying that Evergrande 10 years ago was already insolvent. They were already living well beyond their means, and that this company would inevitably crash into the ground. So that's pretty damn interesting. He said, nothing's changed in the 10 years since that research. I just identified when the problems started. Now, it's really interesting to have this guy's opinion because he's the guy who originally called it, and he's saying that it's not going to be a contagion event. which I think is a very important thing to point out. He says they're going to do whatever they have to do to contain the harm to the broader economy and limit spillover. He said that investors, however, aren't likely to observe the wheels within the Chinese machinery moving because of Beijing's tendency to operate behind a veil when it comes to business matters. So there will be some backroom deals, some backroom agreements, stuff that might be partitioned off. China probably doesn't want to be the reason for a global market crash. They're probably going to step up and have some kind of bailout package or some kind of way to let this company come down to earth in a less dramatic way. They want to limit the impact of a collapse of this company, which is almost certainly going to happen at this point, unless, of course, they bail them out. But the least they can do is limit the impact. They don't, of course, want to see that then have a spillover effect. And it already is having a spillover effect to some degree. So this is from S&P Global Ratings. They say a default by China's Evergrande could test the government's capacity to backstop potentially substantial failures. Now, what they said in a little more in depth here, they said that a default by Evergrande will neither lead to a tidal wave of defaults nor mere ripples from a pebble in a pond, but something in between the two. Evergrande's a massive company. It accounts for something like 2% of China's GDP. It's a pretty big deal, pretty big company, right? But the impact of its collapse will hopefully be limited enough. The Chinese government doesn't want to, let things get too bad, I would assume. So we're going to be somewhere in the middle. It is a serious market event. Probably not the Lehman Brothers of China, though. It's not going to cause a global financial meltdown. At least that's what quite a few analysts are saying right now. Yes, it's significant. No, it's not the new Lehman Brothers. It's not quite that significant in terms of its impact. But it is affecting Western stocks and Western bonds. Evergrande, it's a massive company that a lot of Western companies are exposed to. The likes of BlackRock, for example, they own, the part of the equity of this company. They own bonds in this company. So they have been affected by this whole situation. But it's rather limited, the impact of all of this on these companies. I mean, BlackRock's a giant financial titan. They can absorb a few billion in losses without it being a very big deal, to be honest. So the Evergrande story continues. We still don't have word from the Chinese government whether or not there will be a bailout for this or some other kind of package to rescue the people whose homes are now not going to be built, or to find a deal with creditors, some kind of negotiation or something like that. But the situation continues, so we'll be keeping an eye on that. Just my two Satoshis for the day. Of course, your question: have you been buying anything during this dip? As I mentioned, I bought a little bit of Bitcoin. I have some bids in lower in case the market does move lower. But have you been buying the dip? And if so, what have you been buying? Thank you so much for watching today's video, and peace out till next time.